Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner with the Isom Insurance Group here in the Sunshine State of Florida with a new Quick Bite episode, your fast and informative insurance industry update. Today is Thursday, October 23rd, 2025, and we're digging into a major legal and market shift in Florida's property insurance world. Several insurers are now offering or applying endorsements that discourage or bar the use of public adjusters after a loss. And groups like FAPIA and NAPIA have filed suit saying these endorsements are unlawful. Insurance in the Insurance Journal article that we'll delve into, we'll discuss why this is important and how it impacts three key players: the companies, the agents, and the insureds. Let's get started. Here's the headline. According to the article, at least 6 property insurers in Florida have introduced endorsements that strongly discourage policyholders from hiring a public adjuster when a claim occurs. In some cases, the endorsement states it is understood and agreed that a condition of this policy is that the named insured shall not hire, engage, retain, contract with, or otherwise utilize the service of a public adjuster. These endorsements may offer a discount on premium if the insured agrees, or they may make use of a public adjuster a condition of the policy. The regulatory implications. Groups of public adjusters argue this is an unfair trade practice and may violate Florida statutes. Why is this grabbing? Why is this headline grabbing? Because it alters the dynamic between policyholders, insurers, and claims handling professionals and could shift power, transparency, and cost in a big way. Let's look at what this means for insurance companies first. Cost control and claims exposure. Insurers argue that public adjusters can inflate repair cost estimates, increasing claim payouts. So, by discouraging their use, carriers hope to contain losses. And let me stop here. And let me just explain what a public adjuster does. So, an insurer, a policyholder files a claim. They're handling the claim directly with the company. They don't like the way the claim is going, or they're not getting any response or anything from the claim representative. So they decide to go hire an adjuster, a public adjuster, to take over the claim and kind of do another estimate or another adjustment of the claim of how much they should be paid out for the claim. And that person or that public adjusting is usually companies. They go back and forth with the insurance company to settle the claim. If it's not settled, the public adjuster also has a group of attorneys that work with them where they can escalate it to a legal suit if necessary. Premium attractiveness. The endorsement often comes with a premium discount. So by having the public adjuster not agreeing not to use a public adjuster, some insurance companies are given a discount on the premium if they do include that endorsement in your policy. Like if you sign the endorsement to be included with your policy. And what that means, again, if you agree not to engage with a public adjuster, that can make policies more competitive in a market where rates and reinsurance costs are under pressure. Regulatory risk, but there's also this risk. The lawsuit claims such endorsements may violate antitrust or unfair trade laws. Regulators and courts will be watching reputation and market relations. If the public perceives that insurers are trying to limit a policyholder's rights after a loss, that can harm brand trust or lead to regulatory blowback. So for insurance companies, This is a balancing act. Manage claims and cost exposure, but not cross lines that may trigger legal and regulatory consequences. Now, how does this affect agents and brokers? People like me in the field. Disclosure obligations. If a policy includes this anti-public adjuster endorsement, you'll need to ensure the client understand what it means, and that they're effectively agreeing not to hire a public adjuster or may face reduced coverage or different terms. And you must document this. If the company you're working with offers this endorsement and you write the policy with this endorsement, you need to cover your agency. And I would have notes in that customer's file that I explained this to them and they agreed and who I spoke to. Client trust is another big one. Agents may face increased questions or pushback from insurers who feel their ability to access an adjuster is constrained. You'll need to explain why the policy is structured this way, what the discounted premium trade off is, and what alternative recourse the client has. Training and compliance risks. Agents must stay current on endorsements, form filings, regulatory decisions about these endorsements. Failing to advise properly could lead to errors in omission exposure. Product positioning. Some clients may prefer a policy without that endorsement despite a higher premium. Agents should be ready to shop around or present pros and cons. In short, this change adds complexity to our role as an advisor. It's not just about premium and coverage anymore. It's about explaining a change in claims rights mechanics. And finally, the most important stakeholder, you, the insured homeowner. Access to representation. If you accept an endorsement that says you won't hire a public adjuster, you may be giving up the right to independent claim advocacy, which could impact your negotiation power after a loss. Premium versus rights trade off. The discounted premium may look appealing, but you should ask, is the savings worth giving up the ability to engage a public adjuster if things go sideways? Claims transparency and fairness. If the adjuster you can use is only the carrier staff, will that impact claim outcome? Public adjuster groups argue yes, and that's part of the lawsuit. Renewal and competition. Some carriers hope to commoditize this coverage with these endorsements, but if a regime spreads through the market, it could reduce options for policyholders or shift market power to the insurance company. If you're a Florida homeowner, make sure your agent explains this endorsement in plain language, what you're agreeing to, what you might lose, and whether there are alternative policies without the endorsement. While the focus is in Florida, this development could set precedents for other states and markets. Remember, they always say the way Florida goes first and the rest of the market follows. Here's why. Surplus lines in admitted markets. The article states that some surplus lines policy, less regulated, already use these endorsements, and admitted carriers in Florida are now filing forms to adopt them. Legal regulatory ripple effect. If courts or regulatories strike down these endorsements, markets could shift again. Insurers might revert or new forms might emerge. Market competition and premiums. If one carrier offers a discount with the endorsement and others follows, insurers may face pressure to accept reduced representation rights for lower premiums, shifting leverage away from insurers. Agent business models. Public adjusters are part of the ecosystem. Limiting them could change claims processing economics, which in turn affects carriers, reinsurance, and downstream. Broader rights and consumer protection issues. This may feed into larger debates about policyholder rights, transparency in claims, handling, and the balance of power in insurance contracts. So even if you think this doesn't affect me, if you are in Florida or doing business with Florida located property, you should watch this closely. Here are concrete steps for companies, agents, and insureds. For companies, review endorsement filings and assess legal risk. Ensure communication to policyholders is transparent and fair. Consider how this affects claim strategy and brand trust. For agents, review your book of business for policies with these endorsements. Educate your clients about what the endorsement means. Shop at alternative carriers for clients who prefer no restriction on public adjusters. Document your discussion and client decisions. For insureds, ask your agent, does my policy include an anti-public adjuster endorsement? If yes, what does this mean for me? Compare, would I rather pay a little more premium and preserve the right to a public adjuster or take the discount and give that up? In the event of a claim, review your claims rights, get clarity in writing, and consider legal adjuster representation if you face issues. Ultimately, rights matter. Premium and cost matter. Make sure you're making the choice intentionally. Now that's all, folks. If you found this quick bite helpful, please like this video, share it with your friends, and drop a comment below with any insurance questions you'd like for me to cover in a future episode. And don't forget, a new quick bite drops Monday through Friday at 2 p.m. Eastern. This video is for educational purposes only. It should not be taken as legal, tax, or specific insurance advice. Please consult with a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching, and I'll see you next time. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.